I'm redoing the video on the Russell to make it a little clearer. This was a chat that I posted at 10:43 a.m. and this is a 2-minute chart of the Russell 2000 ETF IWM. The risk bar is 27 cents. We start from the daily chart, and as soon as the daily chart made a higher high, because if you remember, this is the big correction that we had. This is still a down bar because it has a lower high and a lower low. This is also a down bar. This is the first up bar because it has a higher low and a higher high. It's another up bar. And then here's a down bar. And after such a large impulse, you would not expect a whole lot of pullback. In fact, this pullback, came in right at the 38.2 fib retracement. So when this takes off, we should get a good amount of upside this way. So while Powell was speaking earlier, we initially took out that high. And so once we take out the high, we know that the daily trend has changed from down to up, and we're looking for a lower time frame to enter. Given that this was around 10:30 a.m. Central, which is when Europe closes, and Powell was speaking, it was still a fairly active market. So I chose to go down to a 2-minute because there was enough activity in clean bars on that time frame. And pretty much from this up bar, this being inside is also an up bar. Lower low, lower high, down bar. Lower low, lower high, down bar. Higher low, higher high, up bar. Lower low, lower high, down bar. Down bar, down bar. And we pretty much got our 2 waves in very short order. 2, 4, 6, 8, 10, 12, 14, 14 minutes. So this little thing becomes our risk bar, 203.43 to 203.16. That's where I got the 27 cents on the chat. And let's draw a box here. And if you remember, I posted that when this bar was going on here, but of course I was watching it form as it formed. And we could put this all the way across here, 203.16, 15, something like that. And we can see that our stop never gets taken out. And then if you try to look at what type of return we got on this, well, we're still rallying, and I think we can rally even further. But if this is 27 cents, 27 times 6 is $1.62 on top of 203.43, gets us to 205.05, roughly where we are right now. So basically have made 6 times our risk up to 205.05, which would have been on this bar over here, this 1:02 p.m. bar. And this is how we do it, rinse and repeat. I had someone in the comments talk about using this methodology on stocks, and I haven't done a lot of work on it. I do suspect it would work. This is IWM, which is basically an index. I think having strong liquidity, like an index ETF or a sector ETF, would probably help because what we're looking for is the integrity of these bars, without huge tails and whipsaws. This example right here, from a 27 cent risk bar, we've made over 6 times that risk in about 3 hours. And we're still going. So, and then when you take it back to the daily chart, there's no reason this can't go even higher. The next swing high is 207.27, and above that is 209.05. And if we can get above that, we have to seriously look at, a more serious bottom being put in here. Because if you remember, the Russell had a year-long rectangle. Let's see if we can find it here. Roughly this area here was your year-long rectangle. We had a breakout to the upside that failed, and we came down, tested, bounced, broke out of the downside. The first test back here got rejected. Now we're coming back here. So we're either going to get rejected and turn back down, or if we can break back into this box, then everything would look decidedly more bullish. Anyway, drop a like, subscribe to the channel, make some comments, ask me questions. I love talking about this, and I hope you find value in these videos.